back 80 style because I finished the Bon Jovi documentary. Wada, wada. People liked it. I got a lot of messages. They liked the wada. So we'll start out that one with wada. What happened yesterday? We had a pretty decent day. Nothing crazy. I mean, again, baby candles. But I want to start this out with VOO because we have confirmation and we've been going up. Now, the algorithm is up 3% on the current buy. The algorithm makes you 32% for 2 years with 20 positions. So it's over 24 months. So less than once a month. Your average win is 4.51, but 4.51 on this line would take us up to new all-time highs. And I've said it before. I think new to all-time highs, we are going there. Could we have a bigger pullback? This is what I wanted to show you. From the all-time highs, you had a 6.4% pullback on VOO. That is the S&P 500. I don't do SPY. The reason I don't do SPY is because I don't do options. VOO is part of the core portfolio. So I want VOO in there. And so we do have confirmation. Yes, if you bought at 464, you felt it a little bit at the beginning of May where it came back down to 461. You may have panicked. The algorithm didn't panic. Again, emotions. Emotions are strong. If you did and you bought at 464 and you said, I'm getting out at 461, boy, aren't you unhappy when we're now at 478? Because when did you buy back in? This is part of what investing is making sure that you have good intelligence and you're not going to win 100% of the time. Look, I'm down on a few buys. I'm down on Ulta. Ulta is a big one that I have. Mara, I bought at 26. That's at 20. Blew away earnings last night. But we talked about it yesterday. I thought yesterday's podcast was a master class on when to buy overreactions in the market. Every reaction in the market is an overreaction. We've gone over that before. So I thought yesterday was a master class. Now, when you're speaking about VOO, I'm going to show you this pre-made chart, and then we'll go look at a live chart. XXXX. This isn't pornography. This is XX. This is a 4 times levered ETF on the S&P 500. Now, if you bought when the algorithm told you to, you're up 10.2% currently. Still have confirmation. Yes, it hurt going into May. We talked about that. But you're on your way up. Are you going to all-time highs? Because this last buy was 22%. Look at the way the algorithm kept you out of that downturn. Look at how it did that. Do you want the algorithm? The algorithm is part of TrendSpider. So let's go back to TrendSpider and we'll just type in XXXX and you'll see the live chart on this one. I wanted to do that chart because I didn't want things to change. I wanted to put this in, but you can see it got you, it kept you in 22%. It got you in, and then it got you out, and you sold out at 38. You bought back at 33. This is how you trade. This is how you make money. And again, this is a quadruple leveraged daily ETF. So it's not one you want to buy and hold for a very long time. But while you're in these upward trajectories, you can use these ETFs. I'm in FBL. FBL right now. And the reason is, and I've gone over this, the reason I'm in this 2 times leveraged ETF is because it's filling this gap. I have a plan to get out at 26. Small position, not huge. I bought more Meta. I might as well buy FBL to double up this gap. Any reaction is an overreaction. We talked about it. JP Morgan completely filled the gap. Meta will absolutely go back to all-time highs at around 520. It will. Look how it's using the 200-day. This is something that I want to teach you that, yes, you have to take risks in this market. Yes, it's uncomfortable sometimes, but we're at all-time highs. This isn't something where I'm buying a ton of stuff at the all-time highs. I've got plenty of things that are lower cost that are making me money. Apple is a great example. But this is what I want to teach you. Do you go out and buy this stuff on a Friday? No. It's Friday before a weekend. You don't go out and buy this stuff on a Friday. We're going to recap this week. We're going to look a little bit forward, but we're not going to recap we're not going to go out and buy on a Friday. This is why you want the algorithm. You want the algorithm because you want to know what on Friday, which ones to hold and which ones to sell. Well, here on a Friday, you get TrendSpider for half off. You get 6 months free when you buy a year. $48 a month. If you're not making $48 a month by using the algorithm, then you're just not trading with a large enough portfolio. And there's nothing to shame about that. Get yourself a larger portfolio. Then learn how to chart. Learn a process. That's the problem with people, is when you don't have a process and you don't have tools, then you're just blindly going out there and buying. And don't listen to a guy on the internet who wants you to buy. I will show you a guy on the internet who wants you to buy. This is it.
3, 2,
He told everybody short.
boom!
And boom. He told everybody to short, and then 4, 3, 2, 1. Boom. What happened? Everybody lost their nut. They lost their nut, and the entire class is screaming at him. What happened? These are the gurus on the internet. You don't want to listen to them. You don't want to listen to me. Don't listen to me when I tell you to buy. Go and do your own research. Yeah, 4, 3, 2, 1, boom. That was my Sedge. 4, 3, 2, 1, boom. That was my Devon. 4, 3, 2, 1, boom. That was my Target when I told people to buy. I'm still in Devon and I'm still in Target. They have come back. Good companies with good products, with good earnings, they're going to come back. But it's not something that you should be listening to somebody on the internet. I'm not going to win 100% of the time. And anybody that tells you that they're going to win 100% of the time, run. Biggest movers of the day. Novavax, Sweet Greens, biggest movers. These are two really good companies. Well, Novavax isn't a great company. Sweet Greens is a great company. This is the new Chipotle, SG. So if you want to get in early, go in and get early. They're doing really well, 16% after the company reported great earnings. Unity Software dropped more than 4%. That one is a crap. I mean, it's just, they remain optimistic. That's an Intel. If you're in Unity Software, I'd say, hey, I don't know if it's coming back. It might. It's good. Akamai dropped 10%. I think that's a good one. I haven't looked into it, but it dropped 10%. That might be a good one for you to look into. But I wanted to look into Novavax because they say here, Novavax surged 40%. It surged 120%. So, okay, let's see how you would have traded this. And we can look at it live if you want, but I made this chart because it's a 5-minute chart. I wanted to show you how Novavax you could have traded it, okay? Here is the chart. You have a confirmation line. You can choose whichever confirmation line you want. Mine that I like is a 9-period EMA. This is a 5-minute chart. That's the green line that you're seeing. We got confirmation at 4 a.m. If you're up at 4 a.m. looking at charts, you saw this news. You saw Novavax news come out. You should have had an alert on it. TrendSpider has these alerts on big movers. You can set this stuff up. Just go over to Seeking Alpha. Go over to FinViz if you don't want to pay for it. They have alerts that you can look at on news and stuff. So Novavax, you saw this. What happened? People started waking up. And when they started waking up, people started trading this. You still had confirmation over this 9-day. So would you have gotten out here? Probably not. I would have told you, hey, it hasn't filled that gap yet. And again, this is what TrendSpider provides. It's taking the training wheels off every other charting program. You have a gap snake, and this gap wasn't filled. I would say that would be your stop loss right there, the gap. So it never hit it. So you still have confirmation, and you're still going. You lost confirmation here at about 6 a.m. It wasn't large enough to say these are baby candles. You want the big candles. And so when the big candles started, you moved in. And you could have bought even here at about $5.81. Forget the $4 that you could have bought in. But you could have bought here at $5.81. Same thing. You got all the way up to $12. Would you have sold at $12 if you bought at $5? Not with confirmation. I would say there's no way I would have sold out of this. I would have thought it was going for a second run. Now, here at $9, when it gets down to $9 and breaks the 10, yes, don't be greedy. But you just possibly could have made 46%. Say you took, $1,000. That's not a big one from me. Say you took $100. Whatever money you took, you could have made 50% of that in 4 hours. That's what TrendSpider brings you. Now, if we look at Novavax and we bring this up, this is a pandemic winner and an enormous loser. In pre-market, you are back at $10.11. Expect at 9:30 when the market opens, or 2 minutes away. We will take a look at this one. We are 2 minutes away from this one. But if we look at a weekly on this one, this is not one you want to buy and hold. Even though the news is Sanofi is buying 5% of this and they're in a partnership. And yes, this could come way back here to 15. I would say you trade this. You don't own it. And that's the difference between what we're going to go over on some of these. This one you trade until we have some type of solid, a positive movement on that 50 period moving day. I would say you don't own this one. Again, find your position, but read the fundamentals on it and understand what you're investing in. So NVAX, it's just, and FYI, retail is back. You might be listening to me because you got into GME. GameStop triple inside day breakout and close above. We had a triple inside day. Triple inside. That's a daily chart. So if we want to look at GME, is it breaking out? Are we going into short again? Did Gabe Kaplan all of a sudden start Melvin Capital? And has Robinhood all of a sudden said, you know what? Get retail's back. We better open up the GME space. Well, it's down 0.39. It's at 1794. This in the 4-hour algorithm. Let's see. I got to refresh a little GME. We're going to refresh the algorithm here to see what it did. Let's see. Where did the algorithm have you in? $5, $10, $10.44. Boy, that felt uncomfortable when it dipped down here to 10.08. But you know what? It kept you in. You've got a nice gain on this one. Average win on GME, 23% in the algorithm. Find your strategy that works, but retail is 100% back. 100%. I mean, zero DTE options, they're going to have a field day today. Friday? God. OpenAI, this is a danger. For anybody that owns Google, yes, it's going to be down. Yes, Google is going to get hit on this one. Let's see. In pre-market, we can look at Google. Google's down 0.9%. Let's see about where it is in pre-market. This is part of the core portfolio. Hey, it's down 0.84. It's on an up day. I mean, we're up. I've said it before. That 150 was a price to buy Google at. Absolutely. I mean, we went from buying at 100 to buying below 130. I moved it up to 150. We're going to have to move this up to 165, 170. Let's just say 160. Because we're playing with 170 right now. Is 170 a crazy price to pay for Google? I don't think so. We like GOOG because that's the one that Google buys back. Here's the deal. If ChatGPT does launch a search service, remember Google has like 98, 99% of search. If ChatGPT takes 10% away from that, that's going to be an enormous win for Microsoft, which we have in the core portfolio, which you should have in your portfolio. It's going to be a big loss for Google, but Google should be able to counterbalance that with some of their AI stuff as well, some of their expansion as far as what Google does, because Google does a better job of monetizing search than OpenAI will. That's it. Google's a strong buy in the quant. I don't think Google is a sale. I think Google is a buy. Am I adding more? Not right now, because there's a better name than Google. And I want to say Amazon, in my mind, is a better buy than Google. And I will say this, we've said this before. If it holds for multiple days, this 188, it's a Friday. Do not buy this on a Friday. It's holding 188. We can see here the morning candle on May 9th, which was yesterday. The low was 187.44. So it broke that 188 point. But then the rest of the day, it didn't break that 188 point. Right now, it opened up at 189. So we're seeing it hold that 188. Now, it's held that 188 for a couple of days here where it hit the highs. But old resistance turns into new support. If we go and we look at the weekly, And this is part of my thing is, hey, you want to position yourself for days where this is going to pop. Amazon is one of those that will pop on certain days outside of earnings. They will make announcements. They will do certain things that will make this stock pop one way or another. But Amazon is one that you want to have in your portfolio. And Google is one that you want to have in your portfolio. Another one you want to have in your portfolio is Apple. Now, here's how to read this one. New tariffs on Chinese ETFs, other sectors expected next week. So the U.S., the White House is they've been studying the Trump tariffs. They haven't done anything with the Trump tariffs. They're actually going to expand the Trump tariffs, and they're going to put more tariffs on Chinese vehicles. How has this happened in the past? Well, China has come back and limited Apple iPhones for nobody in the government. Expect that to happen again. Expect Apple to get hit. Does that mean you want to sell Apple? No. It means you want to find the buying opportunity in Apple. I'm a big believer in Apple. I have a ton of Apple. I called my broker yesterday about doing a covered call strategy with Apple. That's my plan. I will outline that in the newsletter. If you're not part of the newsletter, sign up for the newsletter. Newsletter is free. Now, on the weekends, I detailed my stuff. This weekend, I will have Alpha Picks. So Alpha Picks is a service. If you go over here to my link tree, you got TrendSpider, which we've gone over. You got Seeking Alpha Premium, which is one service. Then you got a second service called Alpha Picks. And Alpha Picks is a data-driven service. 2 stocks, one on the 1st, one on the 15th. And you get those 2 stocks, and then you build your own portfolio. So when you go to Alpha Picks and you're part of the Alpha Picks member, you can go and look at it. They just had a portfolio review. App Love and Sword, it is one of the Alpha Picks in there. But when you go to the About section and you look at it, they tell you as a new subscriber, when you subscribe, what you should do. I am going to analyze 5 strong buy picks from the Alpha Picks in my newsletter tomorrow. I will analyze them. I will give you a sample portfolio. We may put that into Webull next week. I may do something like that, but I want to put this into practice because I have not used Alpha Picks personally. Larry and others, Scott and others, Scott from our private Facebook group, he has said, hey, he didn't beat the S&P. All of a sudden, he's integrated Alpha Picks into his strategy. He's now beating the S&P. He is super, super happy, worth the subscription. It is unbelievably powerful, this quant. Now, if you don't want to sign up for Alpha Picks, what you get with Alpha Picks is all of the analysis that you get. But also what you get, if you didn't want to do that, is you can just go and look at, App Lovin'. Again, they wrote the thing on App Lovin'. You don't get access to it. But you can see an App Lovin'. When you do Seeking Alpha Premium and you want to do your own, you can see it's a strong buy. So these are the 3 tools that I have. It's TrendSpider, Seeking Alpha Premium, and Alpha Picks. They've asked me to sell more. I don't want to sell more because I don't use more. Those are the 3. And again, like I said, Webull, great platform to trade with. I may put these Alpha Picks to play in my Webull account. There's a Daily Stock Pick newsletter. You can subscribe to my Patreon. Visible if you have a cell phone, blah, 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 blah. But back to this. New tariffs on Chinese ETFs. That's how I read it. I'm a little bit scared for Apple. I'm not crazy about it, but a little bit scared. Deere. Before we get to Target there, Deere. I wanted to point out, Deere has had a good run here. Deere has had a nice little bounce off the lows. It's an industrial, but what I really want to point out is when we go to the weekly chart, and I've said, hey, this is trading within this range. I said this when it was down here. I think I put this in when it started trading here. Probably at about this point, I said, hey, if you're in Deere, you want to get out of it. I did sell mine. When I sold my cat, I sold my Deere. And that was July of last year. October lows and November, it didn't pick up. We saw it come back down in February, but we're seeing this nice range. We're right in the middle of the range again. When you go to the 4-hour algorithm and you take a look, we're right in the middle of that range. We got 399. We're now at 410. Deere, industrials, I like it. I like it to get back to the 200-day. Again, I've said that I've covered this one many times. This is a great company. If you don't know, Deere has tremendous self-driving tractors. And so they have software that they can sell outside, even outside of the agriculture stuff. I think there's great opportunity in that company. Target popping up on a falling wedge scan this morning, held for the retest in MACD curling. I like the MACD. The MACD is one of my, it's part of the 4-hour algorithm. In fact, it's the main portion of the 4-hour algorithm. The 4-hour algorithm got you in at 160. Now, here's the thing. Target over the last 2 years, 24 months, it loses you 4% on 30 positions. But if you bought and held this, you lost 23%. So it's still in its downward trajectory. But what I want to point out is long term, this is using that 176, 175 area. That is where the 200-day is. Your 50-day has started to move positive. So I wanted to point this out because I do think this one reports on May 20th. So sometime in the next 2 weeks, I think it's the week after next. This one, I believe, will report good earnings. I went into a Target store, 2 weeks ago? I liked it. I liked what I saw. Their inventory problems are done. They're coming off $100. If you bought this at $100 just in October, at 109, you're at 163 today. Are you upset that you're coming off at 177? No. It looks a little weak, but again, on the short term, looks like it might get a little pop. So you want to take a look at it. This is interesting. ARK, Kathy Wood, bought over 428,000 shares of Shopify. I bought Uber. Well, let's take a look at Shopify. Shopify from yesterday. We can take a look at it because I do think yesterday I put on a masterclass on how to buy this one. How to buy, anything that had a gap here. You've got a gap from their earnings, 64 all the way up to 75. So you've got a nice gap that is sitting there. When you go to the 5-minute, and that's what I want to show you, it doesn't seem like it started to fill that gap. It's capitulating. It's sitting right there. It is down 1% here in this market. The market is opened up, but it is down 1%. It hasn't started filling that. Conversely, we go to a company like Uber, and Uber is down 1% today. It's pulling back a little bit. But in the 4-hour algorithm, you're still out on Uber. Doesn't have you back in, but you have this nice gap there. And when we go to a 5-minute chart and we go back a couple of days, the difference is this one has started to fill that gap. Now we do have a gap up today. Looks like it was, or yesterday, it was 66 to 67, 66.70. So maybe we go back and we touch this gap. Look how it's using it as support for today. Again, that 5-minute candle at 9:35, the second candle of today, looks like it touched that. Then we came back up. You're still down 1%. But again, these are the tools that you want to use. And at some point, and I don't blame Kathy Woods, Shopify will be a buy. I'm just not willing to throw my money at it until we see from a 5-minute standpoint, it start to fill that gap. But I do think that at some point it will fill that gap. So this was interesting. She bought that. We can see the upward wedge right there that's kind of expanding from TrendSpider's chart. I'm not necessarily buying the dip right now, but next week I think I might buy the dip. Now, a lot of people email me about Celsius. CELH is the symbol. It had a huge day yesterday. Just by chance, Jim Cramer hops on the bandwagon and says, Celsius, I like it. Now, here's what he did. I'm not a Jim Cramer fan. I think the guy just doesn't exactly know how to pick really good stocks. This is up 5% today. Well, this one got killed on earnings. You can see this is a 3% candle on a 4-hour. 3%. It was down. It opened at 79. The low was 70. That was a buying opportunity. Algorithm has you in at 72. Yeah, you got nervous with those earnings and got down to 70. But, again, the algorithm makes you 216%. How are you going to trade this one? Well, I like this one. We talked about back here how it had this gap and how it was expanding on the previous earnings and how it was looking for a breakout because it continued upward past that range. This was just capitulation, and it continued past that range. Ironically, it came close to that 62 level, didn't come all the way down because the 200-day stopped it. So this 200-day was now support. So that support is now at 70. Anything over 70, I think you buy. Are you going back to all-time highs here at 99, 100? I think so. We can go over here to Seeking Alpha. And again, these are the tools that you want to use. I've been going over this for a while now, so hopefully people understand. If you don't have Seeking Alpha, if you don't have any of these tools, you really should get them. Now, Seeking Alpha from the quant is a hold, and the reason is the valuation. The valuation is that they don't give a peg. That's the problem. They don't give a peg with their growth, but their PE is crazy high. That's the only F. But if Jim is right, and again, listen to this, it's like, I think 8 minutes of the 10 minutes. If he's right and they get additional shelf space, that's a big one. That's a big one for them. And I really like it going back there. So Celsius, I think it's going back to all-time highs. Now, we talked yesterday about good companies that report good quarters and get killed with selling. Well, that's what GCT was. GCT is back around 40. It's down a little bit. It's down 1% today at 39.99. It's putting in this capitulation. But yesterday, if you look at this 5-minute chart, we didn't have a gap. And the reason was because you had this enormous 7% candle at 9:30 yesterday. You had that enormous candle covering every gap that was in there. So no gap was created. But this is a good company with good earnings. We can go over to earnings estimates and we can look at this one. Earnings hub. And we can look at this one. GCT is right here. We can look at how good these earnings were. 6.45% beat, 3.32. Look at the upward trajectory of their revenue. Look at the upward trajectory of their earnings per share. Look at all of that. That is a really good quarter. Now, the previous quarter, they beat by 50%. So yeah, it's a little bit less than what they were expecting, but they were expected to report 62 cents. They reported 66. So again, you want to find these stocks where you can buy. There were a bunch of people that bought this dip. I did not buy this dip. I was busy doing this freaking podcast. So yes, I miss out on some opportunities like this. I still hold this at 40. This is a long-term. This is one of the most recent alpha picks. I believe in this one. Look at how the 50-day is still moving positive. Look at how we still have confirmation. Yes, yesterday hurt. Wasn't horrible. But you want to find these opportunities. You use Earnings Hub, which is free. You can use FinViz to value the companies, which is free. You can use the Webull desktop software when you sign up for Webull, which is free. You don't have to pay for the tools. The tools just take the training wheels off and they get you. It's a way, kind of like, people talk about when you get money, you buy your time back. When you hire a housekeeper to clean your house, that's time that you're not spending cleaning your house. When you hire a mechanic to fix your car, because you don't want to learn how to fix your car, you're getting time back. When you go through a car wash, you're buying your time back. That's what these tools are. They're just things to help you buy your time back because they're easy to look at. There's no commercials. There's no ads that are placed in there, and you can easily look at them. Again, 3 tools. AppLovin, we talked about this one. AppLovin remains a strong buy after post-earnings surge. That's the Seeking Alpha Quant. This is part of Seeking Alpha Premium. Seeking Alpha says that AppLovin is a strong buy. It was up huge yesterday. Look at this. It's been a strong buy all the way. We can see this. Since 31, 28, you're at 86 right now. That was last year in July. They've had it as a strong buy. The only D is its valuation. But if you know Steve Kress, and you know Crest Capital, and you watched my interview with him, you can see 0.91 is the peg, the forward peg. The sector median is 1.95. It is not overvalued based on the growth. And what this article tells you is that the growth is continuing. Now, if you had the algorithm, you go back to TrendSpider, and you say, well, let me look how the algorithm performs. The algorithm makes you 117%. Again, same thing we talked about. It was in this channel. Same thing we talked about with the other stock, which was Celsius. It was in this channel. And then it broke out. And you can expect it to continue to break out. Is it going to come back and fill this gap? Right now, the valuation is such, I don't think that gap's in danger. You've got confirmation. You've got another gap up here between 74 and 79. The valuation supports this price. Now, in the 4-hour algorithm, you make 117%. But Gary, I make 192% buying and holding. Well, some people don't have the risk tolerance of sitting there at 192% gain, just buying and holding. They want some safety, and the algorithm provides you that safety. So again, it's all about the tools. Now, another one that we have in the core portfolio is Eli Lilly. Eli Lilly, we talked about this during the last the previous earnings. They said there's more in the tank. The CEO says we are a year out from the first data that we can confirm the safety and efficacy of that pill. It's called orforglipron. It's a long name. So Hot White Hennessy says, sounds like a transformer. I said it transforms your portfolio. Money, 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 money. Well, let's look at Eli Lilly, because Eli Lilly is in the core portfolio. And you get all of these watch lists. You get the core portfolio. You get everything when you sign up for TrendSpider. Let's look at this. Well, if you bought that 735, you're sitting at 774 after earnings. The algorithm makes you 91%. You make 168% buying and holding. But again, you don't have the same risk tolerance as everybody. You want some safety. You want some options. You want emotions taken out of your trade. You still make 91%. So again, over one day, you made over 9%. We talked about this. The dip. Look at the gap. It's already filled. The gap is already filled. The gap down to 735 because of the earnings. Yeah, it's already filled. It's already filled back down and then back up. Good companies with good profits, with good management, with good earnings, they come back. Now let's talk about some of the earnings from yesterday. Last night. Mara killed it. Mara absolutely killed it. We can look at this and we can look at their revenue. Look at that. They missed on revenue by 8%. 8%. That's they beat last time by 9%, but they missed earnings per share. They beat earnings per share by 472%. It's down 4%. Again, this is part of the halving, is that these miners will make less money. That's all Mara is. And do you want to buy Mara? Well, let's take a look. Mara is part of my trading portfolio. I bought it at 26. I'm sitting there with a very small position at 26. I want a dollar cost average, but I don't think the miners have really come out. Now, if you want to use the algorithm to trade Mara, you make 203% versus 88% buying and holding. Algorithm has you in at 20. Am I concerned about this one? You win 32% of the time, but the problem is that you win. Your average win is 49%. So even though you win 32% of the time, your average win is 49%. I would say as you start to lose, you put your stop loss here at 1758 from 20. That puts you down 30%, somewhere in that neighborhood, 40%. It's not that horrible when your average win is 49 and you get back in when the algorithm tells you to get back in. So learn how to play it, learn your tools. But Mara, they got killed. This is huge. I mean, it was an enormous beat for Mara. And you can see, even the TrendSpider, they posted about it. Now, Taiwan Semi soared. Sales soared 60%. They approve a $4 dividend for Q1. Taiwan Semi, part of the core portfolio. They are up 4% at 149. Is this one back at all-time highs? No. We talked about this 141 being support level, and it's clearly support. Look at this. The all-time high is 158. I think you're going back to 158. Those earnings were really good. Again, soaring 60%. 60%. So Taiwan Semi killed it. If we go back to Earnings Hub, because I want to point out one, SOUN, SOUN, they killed it. 22% beat. They lost 7 cents, not 9 cents. Revenue, I said to watch this one. Revenue up 14%. Now, when we go and we look at SOUN here, we can see the chart, and it's going to be way up. Let's see, it's up 19% today. There's a gap. You're going to wait for this gap to go. But if we look at a 5-minute on this one, we can look at a 5-minute. It's losing its steam. You can see the gap in the 5-minute from 447 up to 544. You're going to wait for it to start to fill this gap. It's probably going to make another move. You just had this golden cross on the 5-minute. If you want to trade it, you can trade it. This is not one that I would necessarily buy and hold. Sound here. Let's go look at the quant, SOUN. I think it's a hold if I'm not mistaken, but it's a strong buy on other ones. It's up 17%. God, this is just such a great stock. This is one that they produce. I think Charlie has covered this one. They're not making money. It's a great stock to trade. I mean, it honestly is a great stock to trade. It's a hold in the quant. Look at the F's and the D's. But the valuation is not crazy. The valuation is not crazy. It's a B, but it's not. I will say also this. If we look at, let's look at the summary. Let's look at its revisions. It's got a D plus. Nobody covers this. Look, 5 revisions down, 3 revisions up for a revenue, 2 down. So it's got a lot of earnings per share. There's a lot of issues with this company, but remember, NVIDIA invested in this company. Another one that I said to watch was Frog. Now we can look at Frog. Where is Frog? This is a database company. Frog killed it. Killed it. Look at Frog. Killed it. So you would say, well, 14% beat on earnings per share, a 1% beat on revenue. Got killed on guidance. Its billings, unfortunately, missed analyst expectations, and its new large contract wins shrunk. Guidance for the next quarter and the full year were roughly in line with expectations, which, again, if you beat and guide higher, great. If you beat and just you're in line, you're going to get beaten on if you're overvalued. Overall, this was a mixed quarter for JFrog and not as exciting as some of their previous beats. So let's go over and let's look at JFrog here. We will look at the chart first on the 4-hour algorithm because there will be a gap on this one because it's going down. Is this one you want to buy? Well, let's take a look. Frog down here, you're going to wait for the 4-hour algorithm, probably get you out right on this this candle right here. It probably will get you out. Look for another entry very soon. It's quickly oversold. The RSI is at 27. People are just selling this enormously. Look at how they beat last time. And this one jumped up. Well, what happened? It filled the gap on the way down. The excitement gets over with. Now, if we look at a long term on this one, we say, well, do we really want to buy this one? 50 days moving positive. You're going to use that 50-day at 32 as support. So if you buy here at 34, I think your downside is probably 32. Now, if we go over to Seeking Alpha and we look, let's see what the quant says. Well, it says it's a strong buy. Strong buy in the quant. So do you want to buy this one? I think the quant knows better than I do about the future of this company. It's number 4 out of 46. It's information technology. The valuation is a C minus. So the valuation, look at the PE. The PE is 79 versus sector median 22. The PEG, a little bit high. So I would wait for this one to actually come down as far as the chart goes and find its footing. But you can see already, look, any reaction in the market is an overreaction. It started to fill that gap on the 5-minute. Started to fill the gap on the 5-minute. You want to wait for, maybe midday. Maybe it shakes out a little bit. But I would say that when that MACD crosses up here on the 5-minute, the RSI is at 19. That is extremely oversold. So take a look at it. That's how you want to take a look at some of these earnings plays. If you don't get in before, you can always get in afterwards and take a look at this. Ammer from Twitter wants me to look at ONON. So let's take a look at ONON in the 4-hour algorithm. I have said this before. This is a buy under 30 and sell over 30. I don't trust this one. Right now, I said, hey, I moved that 30 to 31. I didn't know that it was going to get down this low. The 200-day is not providing much support right here. I would wait until the algorithm tells you to get in. The Bollinger Bands are expanding. That's not a good thing while you're on your way down. If they were cinching up like they were here, take a look. See how they're cinching up, but you're going up? That's telling you, oh my God, okay, we could go for a run. See how they're cinching up, but they're not really going anywhere? And then they go up here? Well, that on the way up, that was great. If you bought at 34 and thought, God, okay, this is on its way up because it's trading outside the Bollinger Bands here, you got fooled. You have to have your stop loss in on a trade. On a trade like this, you have to have the stop loss. The earnings are coming up here, May 13th. So next week, Wednesday, I think, or maybe it's Monday, May 13th. I would say you hold off on this. The last earnings surprise, if we go over here to earnings estimates and we type in ONON, let's see what their expectation is. Have they brought their expectation down? Because that's going to be interesting to see. ONON, there we go. It's down 1% today. Earnings estimates in 4 days, 16 cents. They reported a loss of 5 cents last time. 143 million. They're expected to grow. That's going to be hard. I mean, honest to God, that's going to be hard. I probably wouldn't go into this one thinking that they're going to blow away earnings. Let's look at them in the quant to see where they are. Oh, stop. I'm going to go on. Let's look at them in the quant. It's a hold in the quant. We'll get rid of that. And we'll go to ONON. It's a hold in the quant, probably a valuation. Yeah, the valuation is what this one has problems with. And when you look at the PEG, that's where they're really not getting enough credit, is that their growth. So, but when you take a look at Earnings Hub, they're expected to grow by a lot. I mean, that's a 10% increase in reported revenue. That is an enormous increase when they lost 5 cents last time. That's an enormous increase. So ONON, I would probably hold off and maybe trade it after the earnings, because we've seen that this one wants to make a move towards 40. It wants to make that move towards 40. And you're in this gap. See this gap right here between 26 and 30, 25 and 25, 35. I mean, just 25 to 35. It hasn't been able to hold the $35, but it wants to make that move. It's a great company, great shoes, great product, but the earnings are a little bit stretched. So Ammer, I would probably wait until the again, I don't like to buy on a Friday. It's not like the chart is telling me, oh my God, I've got to get this one. Right now it's a falling knife. You don't want to, you could trade this one, but look at the 5-minute. It just has no strength whatsoever on a short, on a medium, or a long. So I would say hold off on this one. Wait for it. Wait for the earnings. If for some reason it pops, I would say go and get it. But, again, I would not hold on to this one, because the logic in the 4 hour is that it's trading in this range. This is like Roblox. I mean, the 4 hour algorithm makes you 4% over 2 years. Do you want to trade 32 positions to make 4%? Buying and holding makes you 75. But buying and holding over the last year doesn't make you crap. Doesn't make you crap. Look, if you bought in February at 33, you're down. If you bought in March at 35, you're down. If you bought here in April at 31, you're down. I mean, you are down. So you go all the way back to March. This is the only candle trading at 29 where you're still up. You don't want to get into this one. So Ammer, I would say hold off on it. Don't get into it. I did get a question, by the way, about ETFs and retirement funds and which ones I would suggest for retirement infidelity from a new listener. I would say, I have a list. Here's the list of everything that I give you. I give you brokerage holdings. I give you Bitcoin and crypto. These are watch lists. Core investments. This is the core investment group. You can get that on Savvy Trader if you're not a core TrendSpider subscriber. I give you covered call ETFs, energy names, leveraged ETFs. The key one that for Fidelity, for like a retirement account, if you just want ETFs, these are low cost at Vanguard ETFs. And you can look, and I put them all up here. They're all in a fund. There's QQQ, QQM, VXF, RSP. There's a bunch of these ETFs that I provide. It's in a watch list. So sign up for TrendSpider. Again, it's $48 a month. You get that list. You can scan on it. You can see when to enter, when to exit. I keep it on core portfolio here because I think these are, if you want to see how good my core portfolio is, go over to Savvy Trader, and we can go here. We can look at daily stock pick. I've got 2 portfolios. One, the trading portfolio you have to pay for. I suggest that, if you want to pay for it, you absolutely can. I usually put my trades out there first. But if you are just wanting the core portfolio, take a look at this. This is it's 35 names. And you can get this on Savvy Trader. It's free to subscribe. When I add names, I buy 100 shares. When I subtract names, I sell 100 shares. It's not trading. This is what's called an equal weighted ETF. It's 35 names. Well, how's it performing? Look against the QQQ. Against QQQ, which is one of the best ETFs. Since it started, I'm at 31%. The NASDAQ is only up 19%. And you say, well, listen, the S&P 500 is better than that. S&P 500 underperforms QQQ. It's 18%. I'm up 32%. Or I'm sorry, 31%. It's up 18%. Well, maybe you're like, hey, IWM just blows it away. You know what? IWM over the same period, it's up 11%. I'm up 31%. And maybe you're a boomer. Maybe your name is Walter and you're in a rocking chair in a home. And you say, Dow Jones, that's my index. Dow Jones is up 14%. I'm up 31%. So again, it's outperforming. This isn't even a weighted. Remember at the beginning where I said size matters? Sizing matters. But these names are fantastic names that even if you were to buy into, Roblox is the only one that I think I said, hey, at $40, you want to sell it. Tesla, I have said this before, I'm down 36% on Tesla. But again, this whole portfolio as a whole, it shows you equal weighting does work sometimes as long as you pick the right stocks. But I would suggest you continue to find the right stocks within the mix. You don't want to time this thing. So let's go over some scans. Exxon, core portfolio winner, gets an entrance here, 118. Is it the initial entrance? No, I don't think so. Let's see it on the 4-hour. We can run this in TrendSpider. Yeah, it is 117. We're probably going for another run. It hasn't been really good at holding that 119 level. If we go and look at the weekly, that 119 all-time highs hasn't been great. I mean, you're talking about what, a quadruple top there? The RSI is high on the weekly, 62. Do you want to buy in? Energy's just going to continue to pop. Now, Pepsi, got to cross up here. I say this, I think it's a $160 stock where you buy in, but 178, look at that trend line. I mean, we can talk about that channel, but look, it was 170. Again, 170 was where the algorithm got you in. But I would say it's a core portfolio stock. When we look at the weekly, you can see that channel that I drew. That's the channel. We're trading below it. You know why? GLP-1. That's it. One other one that I want to point out, if you want all of these names, subscribe to the newsletter. They are free. The newsletter during the week is absolutely 100% free. dailystockpick.substack.com. Here is Starbucks. This is an interesting one because I talked about gap filling after earnings, that any reaction in the market is an overreaction. This one gets an entry in the algorithm at 75.69. Do you want to buy it? I do think during good times when this company is run correctly, it's a $100 stock. That is where this yellow line is. That is where the yellow line is. Now, your MACD significantly down. It's crossing up. Your RSI oversold. It's coming off of oversold territory at 18. It's been, what, a week since we heard these earnings? And it's just kind of capitulated, hasn't started filling the gap. That's the key point. Is we talked about Shopify. We talked about Shopify not filling that 5-minute gap just like Uber did. But when you take a look at this one has not started filling the gap here on the 4-hour. And I want to start filling that gap before I buy. I don't want to time a bottom. I don't want to buy, I'm never going to time this bottom at 72. That's why the algorithm gets you in at 75. It's like, hey, we don't want to time the bottom. We want to make sure that we're going to make money. And it's not 100%. Your average win is only 4% on this one. So, again, I'm not looking to time the bottom, but I'm looking to get into good names. Right now, I don't think this is a good name. We can take a look at this. Look at this channel that I drew. We are well below this channel. And that is because bad management. Howard Schultz put it out there on LinkedIn. Bad management. It's not good management. This is why the stock is not in the core portfolio. Right now, it's pointing directly at management. Management is the problem. So there you go. There you have it. That's everything. Look for the paid newsletter tomorrow. I will outline 5 alpha picks that I would subscribe to now that I may be buying today because I'm going to start writing this today. I may be buying this today. If you want to know which ones I buy today, subscribe to Savvy Trader. I mean, that's where I'm putting all my trades. When you go to savvytrader.com/daily stock pick, you can see there's a trading portfolio and a core portfolio. I put the trades in the trading portfolio. When I bought Uber, I put it in there. The only difference is that later in tomorrow, you may find out what I bought. That's the only difference. Savvy Trader, I do protect those subscribers because they're paying and they find out first. So, yeah. Whatever you want. Again, if you want anything, it's on the LinkedIn. And I'm going to end just like I began. Wada. That's going to be my new thing. Okay, take care. Have a great weekend, everybody. Take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.